Hi, welcome to another stock review and analysis video here on Learn, Grow, Invest. So today we're going to be reviewing Sygnus Credit Investments Limited. That's SCIJMD, that's a ticker. There's also SCIUSD. So there's actually two stocks trading on the Jamaica Stock Exchange. So we're going to go through the full analysis and review and help you to understand as much as we can about this company. We'll talk about the company overview, look at the high-level financials. We're not going to get deeply technical here. We're going to talk about the price history using JMMB Moneyline. We're going to look at the dividend payout over the last few years, then talk about what's upcoming for the company. So let's just jump right into it.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N, Grow, Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, before I get any further, I have to say this video is sponsored by JMMB Moneyline. So I'll be using their platform a little later to go through the price history for Sygnus Credit Investments. So you'll be able to see the platform, see how it works, etc. All right, before I continue, I'm going to open with a word of prayer. Thank you, Lord, for this day. Thank you for your blessing. Thank you for the ability to produce wealth. We pray for your wisdom, knowledge, and understanding. In Jesus' name, amen. All right, so let me just bring up my screen here. So one of the things we have to do here as a part of this review is say that the information here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell Sygnus or any other security listed on any exchange anywhere. Okay, this is just for your education and information. So again, as I mentioned before, we're going to go through just these 5 main areas for the company. This review is meant to give you a high-level understanding of the company so that you're able to use this to, make your investment decision. All right. So, and at the end, I'll take any questions that you may have about the review. We'll talk about the company, talk about the things that we may think are coming up for them, etc. So Sygnus Credit Investments Limited, that's a ticker SCIJMD, and there's also SCIUSD, is a specialty private credit investments company dedicated to providing non-traditional financing to medium-sized firms across the wider Caribbean region. So essentially, they lend money, right? So that's pretty much what they do. So it says non-traditional forms of credit are more customized and flexible than traditional financing. That means that they try to come up with creative ways to lend money that the typical traditional financial institution would not do. It says, consequently, the company offers an alternative channel through which medium-sized firms, which are typically underserved by traditional forms of financing, can access capital to drive their expansion and growth, right? So they're pretty much saying here that they look for areas that are underserved in certain industries. That's medium-sized firms. So we'll talk about kind of their portfolio mix a little later. And everything that I'm reading from here is from their prospectus for when their IPO came out in 2018. All right. So it says here the company targets mostly portfolio companies operating across a broad range of sectors, including manufacturing, distribution, financial services, energy, real estate, transportation, infrastructure, and business services. And these companies will typically have revenues between US 5 million to 25 million. All right, so that's the range and the type of companies that they look to lend money to. All right. And who we have here is Beresford Gray, that's the CEO. Next, just a little bit more about the company. The investment objective of the company is to generate attractive risk-adjusted returns with emphasis on principal protection, meaning they try to not lose any money by generating current income and to a lesser extent capital appreciation through investments primarily in medium-sized firms using private credit instruments, including bilateral notes and bonds, preference shares, asset-backed debt, mezzanine debt, convertible debt, and other forms of structured private credit investments. So these are the type of loan products that they will be offering. So next, the company's investment activities are managed by its investment manager, that's Sygnus Capital Management Limited, acting on the advice of the investment advisor, Sygnus Capital Limited, both of which are wholly owned subsidiaries of Sygnus Capital Group Limited. And we'll see that structure on the next slide. All right, so this is pretty much the structure of the company. Let me remove my image here. So this is the structure of the company. So the investment assets of the company are managed by its investment manager, as we said on the previous slide. That's Sygnus Capital Limited, and that's a subsidiary of SCG. All right. So the company has issued one special share to SCG, and that special share, the privileges are what you're seeing there. And the final piece is saying the special share has no right to receive any distribution of assets except for $1, and a dividend may be paid to the holder of the special share in lieu of or in addition to the management fee payable to the investment manager. All right. So this is just speaking about the structure of the company. So recently, the company made an acquisition. It was announced earlier this year. So this is that company. I'm going to talk a little bit more about this later. So this company is called L.E.A.R.N Financial Corporation. They're based in Puerto Rico. So Sygnus Credit Investments is pleased to announce that we have now completed acquisition of Puerto Rico-based L.E.A.R.N Financial. It's a licensing, it's a licensed financing and leasing company focused primarily on senior secured private credit market for small and middle market businesses in Puerto Rico, and was founded in 2003. So what they've done is acquire this company. So it's going to be pretty much like it's a Sygnus location in Puerto Rico. All right. So the move is to enhance shareholder value while rapidly growing and expanding the business, said Jason Morris. That's the Chief Investment Officer. All right. And as I said, I'm going to read the press release a little later for the company. So what I'll do, let me actually jump over to their website here. Let me do that. I wanted us to kind of go through just some of the highlights of the company. So this is on their website, cygnusgroup.com. The link will be in the description of this video, so you're able to check this out. So I'm just going to go through some of the milestones in the company's history to help, kind of set some key dates for you to have. So the IPO for Sygnus was May 2018. That's what we're seeing here. Let me try to zoom in so you can see it a little bit better. That's what we have here, May 2018. That's the IPO. That's when it came out, listed on the stock exchange in June of 2018. And they would have paid out their first dividend in 2018. We're not talking about dividends right now, so we'll get to that a little later. In 2019, they would have established their second alternative investment company, that's Sygnus Real Estate Finance, and they would have IPO'd sometime last year. We'll see that on the next few slides. And let me see, next part here, they would have, let me see what I want to go through. I'm trying to narrow the scope of all the things here. So let's see, yes. So we mentioned the SRF IPO that was last year. That was about in July, and the company would have listed here in October. This is not the review for SRF, so I'm not going to go through it now, but if you want, you can check out that company as well. In December of last year, we had the acquisition that was started. That's the one we just mentioned on the previous slide. And what we'll do is talk about their results for this year, but those are some other things that they would have gone through. In terms of the company, just to show you what that looks like. So this is the Sygnus team. So we have the CEO, the COO, and the CIO. So we have there, and the rest of the team members here. Feel free to check that out, research them, see if there's anything that you want to learn in terms of the services. So it's split into three main areas here: private credit, real estate, and private equity. So the real estate, that's going to be SRF, that's Sygnus Real Estate Finance. And of course, private credit is going to be Sygnus Credit Investments. That's the company that we're looking at right now. Okay. So for everything else, if you want to see the investor relations for Sygnus, for SCI, that's what you can see on this page. So this is the highlights for the same information that we're going to be going through. All right, so I wanted to see that information. Let me go back to the slides here for a bit. All right, so let's talk about the financials at a high level. All right, so what they had, so they would have just ended in June, their 2022 financial year. So they've been listed just around 5 years now, from 2018 to now. So this is their performance. I'm just going to go through the highlights. We're not going to go deep into the financials during this video. So let's look at the highlights here. All right. Let me just bring up my notes here. Okay. Yeah, I have them. All right. So it's showing here where they had US 8.25 million in investment income. So that's what we're seeing here. They would have had a credit rating that's by a company called Carrie Chris of BBBB. We'll talk about that a little bit later. So 5.27 million in net investment income, and that's actually based on that's based on, where am I? Yes, 5.27 net investment income. Also an impairment loss for 3.8 million. That was based on some debt they had to write off. Actually, when I listened to the earnings call, so they wrote off the debt, but they're still seeking to pursue recovering the monies for the debt. But they said they thought it was important to recognize it, just in case, I guess, they're not able to recover the full amount. So that's what we're seeing here over on the right hand side, this 3.8 million US loss. There was an article about it as well. So that would have really impacted their profitability for this year, and that's why they would have ended up with a lower profit than they did last year. And of course, the headlines would show that they're lower profits. So of course, I think investors would have responded accordingly to that. All right. In terms of interest income, though, it would have grown from last year to 10.2 million. Their financials are in US dollars. Net interest income 7.1 million. What they have here in the statements, they were able to include or show you what the financials would be with the acquisition and without. So that's that line item that you're seeing right here. And then they have their expenses, which we're going to talk about that a little later, because they had an increase in management fees. We're going to talk about what that may mean for them. And based on the type of company, you're going to see a very simple profit and loss statement. It's not going to be a lot. They pretty much make money in one way, and their expenses are pretty much within the same set of categories. So you can expect a very, very easy to understand profit and loss statement. All right. So let's move on here. So next we have their operating expenses compared to total investment income. So this is measuring their efficiency. So they had a 9.3% increase in expenses. That was to the tune of 253,000 US. They had higher management and corporate fees. And we'll get to the MD&A, we'll talk about why, because they would have gotten to a certain threshold in terms of assets under management that would have triggered a certain fee that they would have needed to pay. That's pretty much what you're seeing over the right hand side here. So they paid higher fees, which was up 76.2%, up from about 63% for the previous year, right? So that to me is definitely an area to watch, especially if you're a shareholder, because of course that has an impact on profitability. Right. So this here is the comment about the loss that they had to write off. So it says a change in impairment allowance on financial assets was an increase of 3.82 million versus an increase of 69,000 for the previous year, which almost exclusively reflected a write-off of 3.85 million for one portfolio company in the Cayman Islands. The company was assessed as a stage 3 asset in Q1 of September 2021 financials and in Q3 March 2022. An increased impairment provision was made for the portfolio company as the deemed value of the collateral deteriorated substantially relative to the outstanding debt of the senior and other creditors alongside SCI. So pretty much what this is saying is that the value of the collateral that was used for the money that was lended, what was loaned, deteriorated in value. I guess the impact to Cayman Islands based on COVID would have caused a challenge. I believe it's a hotel. And so that pretty much put them in a position where they were forced to write off the debt. As I said, it's something that they're hoping to recover the money. I think it is what it's going to say next. The charge-off was driven by a further deterioration of the credit outlook for the portfolio company. So based on the outlook, they thought it was best to write it off. That had been earlier issued with demand letters by its senior and junior creditors and placed in receivership. The sponsors of the portfolio company were given a 3-month window to raise capital to refinance their debts and stop a wind-up petition from going ahead in court in August 2022. So that was just last month. Prior to that timeline expiring in August, the sponsor reached an agreement to extend it to mid-September. So we're not going to have clarity on that maybe till the end of this month or next month. So that's why that would have triggered the write-off for them. So despite the charge-off, SCI awaits the outcome of the events in September and will continue to pursue all available avenues to recover its investment. So what this is saying here, and I'll just probably chime in here, I think it's important for them to do this. I guess it would mean if they wrote it off last year, it already is there. If they're able to recover those funds later on, great. But at least they're writing it off, I guess, from the financial year, just end it so that it's not brought into the new one. That's my kind of understanding of the situation. Our hope is to be able to interview the Sygnus team soon so we can get some more insights into that. All right, let's move on here. So what we have here is their EPS. So their ending EPS for the 2022 financial year was 65 cents. Now it has, the previous year it was $1.11. So their EPS almost, that seems like about a 45% decrease there. And you'd have seen for the previous years in 2018, it was seeming to be around maybe about 80 cents. I don't have the exact figures on this slide. And then, so that's how it's been trending. So it was trending up until the most recent year. So we'll see how things look moving forward, especially with the acquisition of the Puerto Rico company. All right, so what I did, so that the next few slides, full disclaimer, the screenshots were taken from the Sygnus earnings call. The link is in the description for this video. So I recommend, if you're a Sygnus shareholder or you're interested in the company, watch that video. They go through their financials for 2022 and help you to understand a lot of the things that you may have as questions. The video is about an hour long, so be sure to check that out. So what this is here are just some of the key ratios for the company. So their balance sheet KPIs. So what they have is debt to total assets, that is 0.47. And we have asset coverage ratio. So what we have here, let me probably just explain it. Their limit is 0.5 for the debt to total assets, and they're at 0.47. So they're within that limit. So it's less or equal to that. Asset coverage ratio, their target is greater than or equal to 1.5 times. They're at 2 times, so they're above that target. Debt to equity, in terms of their debt to equity position, their target is less than or equal to 0.125, and they're at 0.96, so they're meeting that target. And their limit in terms of how high they're willing to go is less than or equal to 2 times, right? So again, it's since they're a financing company, then of course that's a delicate balance for them. And in terms of their balance sheet makeup, it's 100% pure financial assets based on, of course, them wanting to be able to easily convert assets to cash in case they need to provide that service to any customer. All right, so these are the highlights. Again, I've taken it from the earnings call, so I did not do this slide myself, just stating that for the record. All right, and the next 4 slides are going to be from the earnings call as well. So this is their investment activities summary. So in terms of investment in the portfolio companies, and we'll show that breakout soon, it's US 98.35 million, and that's up 18.8%. The portfolio companies that they have would be 30 as at this point. New investment commitments currently is 28 million, and this would exclude the 21 million that was deployed to acquire the stake in AFC, which would be up to 49.22 million if included. That's the one you're seeing in orange on the screen. Next, you have portfolio yield, which is 13.3%, and average tenure in terms of years is 1.8. And their cash on the balance sheet currently is 8.47 million, right? So that's a current state. They made some investment exits. That means companies that would have, closed out, or services they would have closed out for the year. This one would have, it's US 11.7 million in 3 companies, 8 million of which would have occurred a few days before the end of the year. Their pipeline, I think that's one of the things we may be interested in here. US 20 million in approved transactions awaiting documentation and drawdown. So of course, what they're expecting is that with this pipeline being combined with AFC, then that mean good outlook for the company, right? This is their this is the AFC now. This is a company that they would have recently acquired. So private credit investments for the company is US 74.3 million. New investment commitments is greater than 30 million, and they have a greater than 10% yield. And of course, the average tenure is less than 3 years, right? So this is a high level of the company. What they would have mentioned is that they have not fully integrated them as yet. So they're expecting that should take place over time while they try to, finalize things. So this is the portfolio allocation that I would have mentioned earlier. So on the left, you have portfolio company industry allocation. So based on this, the largest group we're seeing here is financial, that's 23.4%. Next we have, I wish they were in order here. Next is infrastructure, then manufacturing, then energy, then hospitality, then fast food. Those are some of the largest ones. Construction. So that's the makeup here. And then when you include AFC, then that's what it looks like there on the right. So what they're pretty much going to be doing is consolidating the 2 companies. So you'll start, I believe, as early as maybe, well, let's see how soon it's integrated, but I suspect it will happen sometime in the next financial year. So that's the current position here. And then this would be exposure by region. So we mentioned the company in the Cayman Islands recently. That's for the rest of the makeup, largely in Jamaica, then St. Lucia, then SSS. Which island is that? I don't know which one that is. It's not coming to mind right now. Bahamas and so on, right? And then when they merge now with AFC, then they now, of course, have more companies in their portfolio. So again, this kind of allows them the opportunity to spread out and reach more customers, going to new markets, etc. Right. So a little bit onto the acquisition. They spoke about just the potential that it gives them. So based on what the company does, let me actually see if I can bring up a little bit about them. So this is a company here. This is their website. Again, I'll link this in the description. I can share it in the chat now as well. So this is a company here. So it's Accrescent Financial Corporation. So it's a similar type of business. They just operate in Puerto Rico. So what these are the companies that they serve. And so you can, I mean, I figure we'll learn more about the company as we go. Like we didn't get to look at the company's balance sheet or anything like that. I didn't see that when I went through the site. So I don't think we fully know the scope of what has been added. I don't know if David has written an article on it. I'll probably ask him. But let me find the press release for the acquisition at least. Let me do that so we can look at that a little bit. Right, it says acquisition was completed on February 28th. That was earlier this year, and the consideration was $21 million US for a almost 94% stake. The management will retain the 6.34% and is also entitled to an earnout, which will be only contingent on the attainment of agreed financial targets. Earnouts are normally agreed on during acquisitions if the seller is asking for a price which is more than the buyer is willing to pay, and it's normally tied to the acquired company achieving certain financial goals. All right. So the deal was first announced in late December. We saw that already. And it was approved by the OCFI, that's the Puerto Rican regulator, on February 18th. So the expectation, as we read before, is to enhance shareholder value. Of course, that is one of the terms we hear a lot here. The company plans to deliver on the strategy that was outlined in the previous earnings call. They'll work out, well, no, that sounds the same. Okay, so this is the part I wanted to highlight on here. So the company is in a 100 billion economy and represents a much faster scaling vehicle than all of SCI current regional footprint. So what they're saying there is that they think with this company, they're able to grow at a faster pace than any of their existing locations, right? So build relationships with international partners, a process which has already begun. And we'll talk about some of the things in their pipeline a little later. And you know, while they're doing these strategic initiatives, they will continue protecting existing portfolio investments and raising and deploying capital in a regular way. So they're pretty much saying it's business as usual. All right. So it is set to have a private credit portfolio of at least 60 million, and we saw the updated figures there, and assets under administration of at least 125 million. So what I think you can expect there is to see that increase when the next set of reports will come out for Sygnus. So just look out for that. All right. Let's talk about the price history a little bit. I think Devon has been Devon just asked about that. So I'll show you the highlights and then we'll go to Moneyline to look at the live data. I'm actually just log in right now. Okay. All right. So this is the opening price for today was $13.20. Last traded price was $13.59. Volume traded was only 64,000 units, and the closing price was $13.35. We'll look at the buy and sell orders in a little bit. And you see the price movement sometime in 2019 or maybe close to 2020 was as high as it was above $25. Now, as you see, it's right around $13. Year to date, it's down 11.3%. within the last year, it's been up to $19. So it's down, I would say, down about 30% from in the last 12 months. And the shares outstanding is 590 million. That would be after the APO, of course. All right. I did mention that there's SCIJMD and SCIUSD. So this is the USD side of things. So these are the orders currently in the queue. Open price was 12.129 cents in terms of USD. Volume was 10,200 units, and this is a chart for the last year. I think this is more impactful if we look at it on Moneyline. So let's do that now. All right, so I'm in my Moneyline account. If this is the first time you're using Moneyline, to get to view the stocks, just go to stock market summary under other services, and then you can pretty much search for the company that you want to see here. All right, so this is actually very responsive. So you bring up the same information that you just saw the screenshots for. All right, so this is SCIJMD. Let me click show more here. So we have about 23 buy orders. That's not really a lot compared to some of the other companies that we see. Maximum order here is about 67,000 units at $12.52. In terms of sell orders, sell order for 108,000 units at $13.73. Let's show more here. And not really a lot on the sell side either. In terms of, let's look for the last year here. We saw some volume on August 29th for 5 million units. Let me try max to see, like, we haven't seen volume somewhere in between 1 to 3 million over the last year or so. But what we saw was February 2020, that was before COVID, was about $25. March, we know what happened in March. We saw it move down, and so most companies would have had this in March of 2020. So that's pretty much what was to be expected. But then, you know, it hasn't really, you know, gone back to pre-COVID levels in terms of price. We did see, as we showed, the peak for the last year around $19. But what has been happening? So a few things that would have happened. I mentioned that they did an APO, so that would have been I think an impact for, I think the APO was in January 2021. So let's kind of see how it has performed since then. I think it was January 2021. From the APO, the price actually went up as high as I think it was up to $19. We'd have to probably look at the candlestick chart. How long does it? Candlestick chart give us here. I'm trying to get when would have gotten to that $19 price. All right, I think it was around somewhere this time, October. So let me check that again. October 2021. All right, so let me see if I can go to the specific day here. And that did not even move for me. All right, so I'm not gonna spend much time there. So the question that Devon is asking, right? So why did the Sygnus share price drop to $13 you've been holding since your APO? So I think it's a couple of things. Of course, each investor determines what they're willing to buy and sell for. But I think in terms of their performance coming over the last couple of years, we just saw, for example, the write-off that they had to make that would have impacted their profitability for the year. And there are also some investors that would have, I think, concerned about the dilution that would have taken place through their APO, etc. Again, I think anything else that I would say here would be speculation. All I can do is kind of present the information to you, and then, you know, you take from it what you will there. All right. In terms of the company outlook, though, I think that based on just the current state that the company is in, I think that they have opportunities to grow from here, both in the business itself with the recent acquisition. I think that in terms of the movement of price, they are going to start a share buyback program, and they did state that they would be buying back up to 15%. I think that's something that we may see some new interest from investors there. That is on a few slides from now, so I'll share more about that then. Yeah, so Devon, I mean, hopefully that kind of gives you some kind of understanding. I think in terms of how the company would have been performing, everything except maybe that impairment loss of almost 4 million would have been pointing to the company performing well, except for that loss. But we are in a current market climate where that loss, I think, is all things considered. I mean, there is some amount of risk that comes with the type of business that they have. And I think they did the right thing in terms of writing off that for the previous financial year. So that means with the growth that they're projecting from the acquisition, things should be trending up in terms of their profitability going forward, right? But again, we just have to see how that goes. All right. So let's kind of look at the USD for a little bit. I don't want to just focus on the JMD. There is a USD side as well. Doesn't trade as much. So if you're going to trade on this side, you want to do so with caution. So over the last year, it's kind of moved between 0.135 or 0.134 down all the way to about 0.111. All right, so that's the band in which it's traded for the last year. So just bear that in mind. All right, in terms of I'm not getting the best data from there, so I'll stick to the 1 year. So within the last year, that's the range that we have. All right. All right, so let me close out a money line for now. Go back to this here. All right, so they are known to pay dividends. They would have done, I believe, let me look at the most recent dividend announcement here. I think they're either at the point of considering dividend or about to pay a dividend. So dividends were mentioned on the earnings call, I believe. So I believe they're meeting to consider dividend. This is their dividend up until 2021. So this is the amount that they would have paid out. It is a company that's known to pay a good dividend. Well, good is relative, right? So they're known to pay consistent dividends. So what you want to do as an investor is look at the yield of the dividend and consider whether or not that is within the threshold of what you're looking for. I'm trying to look for just the highlights here to comment on the dividend paid. Just one sec. Yeah, so they would have paid, let me bring this up here. So it says here the group paid a record $3 million. That's a 0.005 per share US in dividends for the financial year that's just ended versus 1.7 million USD paid the year before. So they paid almost 2 times the amount of dividend that they paid the previous year, representing an increase of 78%. All right, so they will meet to consider a dividend on Friday, September 2. So that was last week. So I'm suspecting by this Friday they'll make a dividend announcement. So that is usually what happens, right? All right. So in terms of news, so a couple of things coming out of the MD&A from the most recent report. In terms of their priorities going forward. So their 3 key priorities are managing the risk of their portfolio, that is minimizing realized credit losses. We spoke about the one they had before versus expected credit losses, as the latter will fluctuate based on market conditions, but the former is permanent loss of shareholder value. And as I said, that's just the risk that you're open to with this type of company. Maintaining ample liquidity and flexible capital structure to support existing portfolio companies. And they did mention looking into getting more finances, I think, with an international company. I didn't finish watching the earnings call, but I believe that's what was mentioned. I think I might have something about that on the slide that is coming up. And then they want to deepen current partnerships and build new relationships across the Caribbean. They do have that opportunity with the recent acquisition as well. So their footprint is increasing and grow the business well beyond the duration of the COVID-19 pandemic. And yeah, this is the final slide that we have that was taken from the earnings call. So the acquisition, that in terms of integration and scaling of that business, that is ongoing. They want to be able to, they're going to be setting some targets, I think, going into their new financial year. They're going to discuss that at their 2022 AGM. I believe that's coming up in a few weeks. So they'll be setting those targets and communicating that with their shareholders. They're going to, well, we saw an increase in the dividends paid already. So that is something that they have as ongoing. They have here increased credit line facility. So this is what I was mentioning. They're currently in negotiations with they mentioned a company to have that sorted out. And they mentioned the launching of a new financial solution, but they mentioned that they did not want to give away that strategy on the earnings call. So no more details really on that one. Finally, what I wanted to mention here is the share buyback. So it's going to be by the end of September 2022. And I believe it was mentioned up to 15%, right? So if we look at, I think the current shares outstanding is 590 million. So 15% of those shares, I believe, would be somewhere about, let's say, about 70 million shares. So let's see how they're going to do that. Are they going to, like, we need more information on that. But that is something to look forward to Devon. I think that if you're holding from APO, you may want to consider seeing what the share buyback entails, because of course what the APO would have done is added more shares. What the buyback will do will reduce those shares. So as an existing shareholders, your percentage ownership will go up, right? So that's something that usually investors look favorably on. So that's something to look forward to there. All right. So again, before I take questions, I just want to mention that this review is sponsored by SCIJMD Moneyline. So let us kind of look and see what questions we have here. All right. Good night, everyone. Sorry that I didn't acknowledge you guys at the start. Really, really good to see everybody here. Let me know if you're joining me for the first time. We had quite a number of persons joining us for a class that we had on the weekend. If you missed that class, the video is up until Saturday. Be sure to check that out. Hi, Michael, Romain, Jay, Cheesy Gully Side, interesting name. So Romain is saying, as a takeaway from the recent class, based on the date you provided, the stock is in a state of consideration for buying into, since they have set a course for growth despite the market. So what I would say to that is, so what I find, and this is just in general, right? So again, I have to kind of put in my disclaimer here. So I think when you have a company that has been trading low or going down for a while, I think when they have an event coming up like a share buyback, like the most recent acquisition that has taken place, I think that bodes well for them in terms of the potential for investors to look at those things favorably, because they have had such a poor last 2 years in terms of share price movement, right? So I think there is some opportunity there. That's me personally. We'll see how the market responds there. So furthermore, from Romain, initially I bought the stock for a same share when I started out. I don't want you to rephrase that, right? Devon is saying, but I heard they're planning another APO to convert their preference shares. That would be interesting. I didn't find that in my research. If they do another APO, I don't think it would make sense to buy back shares. I can't. Let me search for that right now. Let's do a web search and see. Sygnus APO. Devon, where did you hear about that? About them planning another IPO to convert their preference shares? Yeah, I didn't hear about that in my research at all. Kenny Royal, first time to the show. Thank you for being here. I hope you have subscribed. Hopefully you found this valuable so far. Check out, if you're brand new to investing, check out our Stocks for Beginners class. We just had it last Saturday. It's 4 hours long, but it's extremely helpful. Watch it an hour per day is what I tell persons, but be sure you learn the basics of investing from that video. All right. Yeah, so an APO, I mean, to me, it depends on the timing of this, right? So if it is that they're planning both, again, I didn't see any record of that in my research. There was no announcement of that. So I can't process it until I see the details of it. So the AGM, I may drop in on the AGM if I'm able to and see. But I mean, it depends on the timing of both, right? Yeah. So let's see. Are there any other questions for me, guys? Let me know if you have any questions coming out. I know a lot of persons are kind of hoping to. Sygnus is one of those companies that, if you think about before the pandemic, they were doing extremely well. I believe the price, as I said, was above $25. It's 30 now, so it's 50% down from where it was February 2 years ago, right? So I think that means it's one of those companies that, one, if you've been holding all this time, depending on your buy price, you have to kind of assess where you think the company is headed to see whether or not it makes sense to hold, to buy more, or to sell, right? That's a personal decision. That's not really what we focus on here, but it, to me, I think they have a great opportunity moving forward for you to see some growth in terms of the share price. That's my personal opinion, right? All right, I'm getting more from Romain here. Sorry, when I started out, I bought it for a small amount, and when I checked back, I was shocked to see it went from a few cents to $12 now. Lack of knowledge need. Well, I mean, so yeah, the company, as I said, so Romain, if you watch the class on Saturday, one of the things I mentioned is that you want to invest consistently, right? So if you found that you were making some money, you had to kind of make a decision whether or not you want to keep adding to your position or you want to take those profits and go. Again, that's a personal decision there. But look at where you think the company is headed is what I would say. I think the things that we've outlined means that the next year should be interesting for them, the next 12 months. I think we may see a much different reaction from the market for them in the next 12 months is what I would guess, right? Yeah, it might be private indeed, because I didn't see, I didn't read through the full, let me see if there's anything, that I can find on that. So I have a million windows open here. This is the MD. Let me search the last, let me search. I'm not searching the last report for the, yeah, not seeing anything. It was in your cumulative preference share offer circular. All right, let's search for that. Cumulative preference shares. All right, let me share my screen so you can see what I'm doing. Okay. So I know about the preference share, Devon. I'm just wondering the feedback about them converting it through APO. I have to. I can't read the full article, guys. I don't have a subscription to Gleaner. Let's see if the Observer wrote anything on it. Hopefully David wrote something on it. Or maybe I can find it on their website. Let's see if Observer did anything on it. Okay, let's see what it says here. All right, so I'm just going to do a quick read through to see if it mentions anything about APO, because the preference share is already there. I'm just doing a quick read, guys. Yeah, Devon, I'm not seeing anything about an APO for them. Yes, I don't know. I'd have to ask around about that. I don't think if they had mentioned an APO that I wouldn't hear about it, right? So Orville is saying, in contrast, like JMMB. All right, I'm not commenting on that, Orville. Romain, you are welcome. You're welcome, definitely. People running down to things to say, so they say be patient. You know what? I can't even fault you for saying that. So two things, it's always my issue, right? One, the abundance of information in our market. So we don't always have enough information. So for example, Orville, the point that you're making that they say be patient, it's really like long periods of time before you get any meaningful information, right? We saw where we interviewed JMMB the other day talking about the share buyback. We have no clear idea as to when that will happen. They've given us a response true, but we don't know when it's going to happen. Some clarity around that would be helpful. I don't think necessarily Sygnus is vague about their share buyback though, so we'll have to give them till the end of the month to reveal that. That's one of the things I'm hoping to speak to them about if I'm able to interview them, so you can look forward to that interview. But yeah. All right, guys, so thank you so much for being here. Please like the video if you have found value in it. Thank you so much for being here. Really appreciate the time. Yeah, just look forward to more content from us. Watch the class if you haven't done so yet. The video is going to be taken down this Saturday, and the next stock review is going to be on the lab. It's what our community voted for. If you want to see your company being reviewed, just look out for the poll that we have and then just vote when it comes out. All right, thank you so much for watching. I'll see you in the very next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms.